Hello traders, Vladimir here from Home Trader Club. Welcome to our weekly Forex forecast. Before we begin, as always, big thanks to EightCap broker for supporting our community and to enjoy all the amazing offers we have with EightCap broker, including the access to our trading club, including the access to the daily live trading room and all the day trade trading ideas, the trading systems, indicators, private sessions, everything. You have the link below this video in the description. Please refer to this one and find all the opportunities to enjoy the amazing offers. So the last trading week was not as volatile as the recent ones until the last 2 days and the expectations from the Federal Reserve to give big hint that the rates would be changed soon. That happens in the recent meeting they had, and the coming week also not expect to be super crazy, but there are several very interesting news to pay attention to. Let's take a look on the news fundamental wise. We start with the consumer confidence. That's on Tuesday. On Tuesday 10 a.m. EST time. Then we have CPI in Australia, very important one that could affect the Aussie big time also. And then it starts to be more interesting where we have the GDP in US, that's on Thursday, and the PCE index, where is it here? PCE index, the core one, in US on Friday. That should be the final green light that the rate cut, so anticipate the rate cut is coming. In between, we also have the CPI in Eurozone. Pay attention to this one, that could cause some big effect on the euro, as the forecast shows a decrease on the core. My bad here. On the core, on the CPI in Eurozone, on the annual read. That's why I was going to confuse the words. Is showing 2.2% versus 2.6 in the previous read. That's a big change. Anything to the left or to the right of these numbers could have a significant impact on the euro dollar. If the numbers increase even more, that goes below 2.2, that could start to put some bearish pressure on the euro dollar, and that will be important on what we will see in the moment. So the first pair I want to talk about is the euro dollar, and where do we stand with that? Where do we go? So I want to follow up on the idea we discussed on the previous week weekly forecast, where we expected to see one more high, pull back, and further continuation. So we got the one more high. It happened to be slightly higher than I expected. I expected it to be somewhere around the trend line and the resistance. It did hold the resistance, but the pullback was not big, which again brings the bullish momentum and makes the continuation up. So the bullish view, as we had it, started from the break of this massive triangle from the weekly chart, and our anticipation was and remains that the euro dollar is going to complete some big significant waves on the daily chart. That lines up perfectly with the expectation that from the weekly chart perspective, the euro dollar is going to retest this high, and on the previous uptrend, this high and the 61.8 Fibonacci extension, which is basically closer to 115 on the long run. So I do believe in the short term the euro can make some pullbacks, but later on it should continue higher until the weekly will find a way to complete its cycle and start to make some bearish divergence before we can talk about the sells. So if we take a look on the 4-hour chart, the waves currently lined up perfectly. Everything here stands still. Any pullback, if and when happens, should bring further rallies on the euro dollar. For me, the plan was bullish and remains bullish. If you are not yet in, buy the dips, remains the plan. Also take a look On the numbers, how the numbers, the volatility change on the euro dollar supports everything. The monthly percent change is over 3%, the 7 days over 1.5%. That's a very bullish momentum. 24-hour chart is below 1%, which hints that the current waves slightly slows down, and that's why the numbers lines up perfectly with the analysis. Buy the dips is my plan. Let me know, what do you think about the euro dollar? How high could this one go, and what's your expectation? Share with us your thoughts in the comment section. The next pair for today, the pound dollar. But before that, I would like to ask your support. If you appreciate this video, the trading opportunities, and you find value in them, please hit this like button. If you are new to our channel, please consider to subscribe with the subscribe button below this video. And I invite you to our trading family, the Home Trader Club, of course, where you will enjoy your access to our comprehensive courses, real-time trading education, real-time trading opportunities, access to the community, our trading tools and materials, and so much more. Join our family with the link below this video in the description. So we follow up on the pound dollar from the previous week. Our plan was buy the dips. As we can see, the dips during the week were not big. Couple of dips, but they were not big. They were holding this beautiful supportive zone, and the rally continues. So I want to go back to what we started many weeks ago on the pound dollar, where we analyzed the scenario here that the pound is going to break the range, come to retest, and further continuation. The plan did not change, and as the euro dollar, I believe the pound dollar is doing the same and going for the long run all the way up to the zone of the 61.8 Fibonacci extension, probably even beyond that for the long run. Why this zone is so significant? As it meets here the high of the supply and the previous high of the supply of the previous uptrend, and this area here surrounding the 135 up to 138 is key zone where I believe the pound dollar is heading. Going down to the daily chart, we have a perfect synchronization. Highs on the chart, highs on the indicator, absolutely no signs against. Usually, unless the market goes bananas and something unexpected happens, that brings buy the dips plan. If we go to the 4-hour chart, on a 4-hour chart, we have already some signs that a slowdown is possible. And one of the other reasons why the slowdown is possible is because sometimes when the move get overextended, and now with the Federal Reserve giving all the signs that the rates is actually a 99.9% done deal, when the market could be overexpected, too much traders could try to join the trade and the pair could go and correct itself. That's a very normal behavior. So I would not be surprised if we create some peak around this zone. As we can see, we already have some overbought conditions. We have overriding on the Bollinger Band. As you can see here, the red line, this is my custom Bollinger Band indicator. Last time it happened was right here, not too far. It was in July, and we all remember the deep pullback happened since. I'm doubtful it will be so deep, but I do expect some pullbacks and further continuation down. This is the first key zone on the pound dollar. The next key zone is the rising trend line, and of course this mini consolidation here. Let me just draw it for you. Mini consolidation here and here. Any pullback towards these zones should give the green light for further continuation upside. So my plan here was and remains buy the dips or ride your uptrend if you are involved. For those of you who follow us in the Home Trader Club, we had our pound dollar buy reaching the first key target zone this week. It was right here after the trigger. This is the purple area. We got all the way to the first target, and now potentially riding all the way to the final target zone. In terms of numbers, like the euro dollar, the pound dollar is screaming bullish run. Monthly chart 2.3%, 7 days 2.7%, the 24 hours slightly below 1%, which shows some losing momentum in the short term. Again, numbers lined up perfectly with the chart. Buy the dips was and remains the plan. Let me know what do you think about this one in the comment section. Then next one for today, silver. Usually I don't share my view on the silver, but the way it looks right now here, it looks like the silver is going to complete its weekly cycle. So if this analysis is correct, I do expect the silver eventually to make here some final high until the weekly cycle completes itself. This is how I see the silver. And if we go to the daily chart, what we see here also lines up perfectly with the weekly chart. We have sequence of highs and lows going to the upside. No bearish divergence, higher highs on the chart, higher highs on the MACD and the RSI. Classical synchronization, corrective structure to the downside, and renewed momentum, while the key support zone, which was a resistance before, became a support, is holding. So for me it's a bullish sign, and the way it looks right now on the 4-hour chart, silver is creating the bullish trending structure. So as we can see here, we start to see the highs and lows lined up. I believe the final high here is a matter of time and then some pullbacks and further continuation upside to complete the weekly cycle. Again, some trade from the club we have on the silver. For those of you who are already involved, this is what we follow, right? The trigger, the rally, possible pullbacks happen here as since then we create a bearish divergence, but then we expect further continuation upside to the weekly target levels. So for those of you who are involved, ride your buys and just manage them once the 4-hour chart shows the divergence, and then with the pullback can rejoin or add on or join back or just join if you missed before. Plenty of opportunities on the go. All that remains for me valid as long as this series of lows is holding itself. So the way I see the silver is pretty much similar to the euro and the pound. Buy the dips after the divergence completes should be my trading plan here. Let me know how do you see the silver, and would you expect it to make the weekly high to complete the divergence there? Share with us in the comment section. Final one is the dollar yen. Dollar yen had a multi-time frame divergence. You can see here we already got the alert from the Bollinger Band indicator on the monthly chart that we have overriding conditions for more than 20 candles. Last time it happened was here in 2014, and we all remember the major drop since then. So as soon as it peaked around the 160 psychological level, weekly chart completed a bearish divergence. And look at the monthly charts. This is massive 2-candle reversals. Besides the monthly chart, the weekly completed its own divergence, and basically everything became lined up to the sell. The beautiful part happens here. We got the trend line, we're getting the pullback, and the first further continuation down is expected. Now, I personally, during the week, I was expecting to see some deeper pullback. I was looking for opportunities to trade some zigzag here and then go for massive sell. That still could happen. We still could see something like that, some range, prolonged range, and then continuation. However, with the 4-hour chart restarted or regained the momentum to the downside, the plan here is straightforward. Sell the rallies. I believe that the dollar yen is going to create here a new low, probably to clean or at least try to test the lows from the weekly chart. We are talking about the 140, potentially down to 137. There I do expect dollar yen to start and create some slowdown, bullish momentum, bullish reversal signs, and then turn around and play basically somewhere in between the 140, 137 up to 150 again. I think this is going to be a long-term new normal zone. on this pair. Until then, sell the rallies. I do expect the dollar yen to drop and create a new low. How do you see this one? Let me know in the comments below this video. That would be it for this one. I hope you find value in it. Don't forget to hit the like button below this video if you do enjoy these opportunities. Thank you for your time watching this video. If you have any questions, don't hesitate to ask in the comment section. And I want to invite you once again to our trading family, the Home Trader Club. Enjoy a full trading courses we have there, real-time trading opportunities and trading education. Every opportunity is explained detailed with a video. Then we have our weekly sessions, so much more. Join our family with the link below this video in the description, or with EightCap broker offers that you have, also with the link below this video in the description. Best to you and yours. Thanks for watching. I'll see you soon with more good trading. Bye for now.